Hello, this is the TradeSight U.S. Stocks and Futures Market Preview and Domestic Data Roadmap for the week beginning Monday, the 14th of July, 2014, and ending Friday, the 18th. Hope you had a good trading week. Here's a look at the ES front month futures contract. This is the continuous contract on the broad market. You can see this is the daily chart. We had the 13 sell signal over a week ago. We had 2 big days down this week, headed lower in general. One of those days was actually a gap session down on Thursday that recovered. So Monday was down, Tuesday was down hard, Wednesday was sort of a measuring day, what we call a measuring day, which means we kind of took a break, which is fine. Unfortunately, we were hoping for either another measuring day or to open flat and head lower, let the selling resume on Thursday. Instead, we got this big gap down, and that just destroys the momentum. Instead, we came back to fill the gaps on the S&P. I'm sorry, on the NDX, the Nasdaq side, came close on the S&P, and then on Friday we basically opened flat and drifted on light volume, only looking at 1.4 billion shares traded on Friday. Very light session. We knew that after the first hour. We made some good money Friday morning, or at least some money. I wouldn't say good money. We made money Friday morning off the trades in the first hour, but volume was so light we slowed down after that, and that was probably a smart thing to do. But overall, the sell signal is still in place. Obviously, we're waiting to see when the actual sellers come back in, and we'll talk about what's coming this week in a little bit. Get you set up for it because there are some things to be aware of in the week ahead. Here's the Nasdaq side. This is the NDX index. Again, a 13 sell signal. You can see more clearly here the down days, and then the recovery on Thursday and Friday. Here's a look at the S&P cash index. Doesn't look really any different than the futures. Here's the SOX index. This is the semiconductors. And here's the biotechs, Nasdaq biotech index, which broke the moving average Monday and Tuesday and is holding under here. So overall, slightly negative week for the market. We made good money Monday and Tuesday for sure. Wednesday was pretty slow because it was a measuring day. Thursday with a gap, not really the ideal type of trading day. Friday made some money in the morning. So it was a reasonably good week. I really was hoping for even a better week if that next move had been to the downside instead of the gap, but it is what it is. Let's take a look at oil, which retreated almost to $100 on Friday. It's interesting this time of year with entering core hurricane season. Usually oil's on the rise here, and instead it's coming back down, and hope that's not a sign of the economy being weak. Here's a look at gold right now, which has been on the rise. A couple of stocks that we trade regularly. Let's take a look at some of what we call our generals. Here's Apple holding near highs. Here's take a look at Google, which actually held in pretty well this week. It was obviously down Monday, Tuesday, but recovered a lot of it between the last 3 days of the week. Amazon had a big up day here on Friday, broke out even. Positive day for Amazon. Netflix, little pullback here, nothing substantial. Last 3 days have been pretty flat. Actually, that's a bigger pullback than some of these other stocks we're looking at. Tesla down the last 7 days or so, but held in the last 4. Forming a nice cup, by the way. If you take that high back in early February or late February, you've got a nice cup, symmetrical cup forming. If we break out of that eventually over that 265 area, maybe in 2 months or so, that could be a real strong breakout pattern on Tesla if that happens. Of course, a lot of that's dependent on how negative this pull in the market ends up getting. All right, let's take a look at what we did intra-week here. We'll go to the the ES futures contract, and we'll do it in 10-minute bars so that we can get the whole week on the one screen. So here we are. Remember, the prior Friday was that holiday, so what you're seeing for Friday is just some test trading. Basically, they opened the market for a couple hours. There's almost no volume in it. So really the rest of this is Monday, Tuesday, Wednesday, Thursday, Friday of this week. You can see that Monday we did head down. We gapped down a little bit, left the gap above, and then rolled, got closed a little more negative. Tuesday, gapped down and just kept going pretty heavy. Tried to recover over lunch and drifted back down. Wednesday, gapped up slightly. That's that measuring day, pretty much a flat day, narrow action. And then Thursday, the big gap down, and the recovery didn't quite fill the gap. Friday, fairly flat opening, and we again just drifted up. We only gained 2 points on the S&P on Friday. Nasdaq side was much more positive and held up better for the week net. But again, you can see Monday was a moved lower. Tuesday was that sharp sell-off, nice trading for us. Wednesday, the gap up, filled the gap, and then recovered and flat. Thursday, the huge gap down that recovered and exactly filled the gap for the day, and then drifted back a little bit. And Friday, We gapped up a little, filled it quick, came back up, stalled out, and then over lunch broke out once. And what's interesting is you can see the green line, that's the static trend line that's currently in play. Look how that was from Tuesday, and look how that was the high on Friday. Pretty interesting technicals right there. So that's what we saw out of this week. Volume was back and forth. So on Monday and Tuesday, volume was reasonable. Let me pull up the daily chart actually, just to give you a look. Actually, we'll do the intraday here. Here's the volume on the Nasdaq. So Monday we had about 1.6 billion shares by the close to it. Tuesday we closed at 2 billion shares. That was good. Wednesday, that was the big sell-off day, remember, on Tuesday. So the volume was on the sell side after that sell signal that we got last week. Wednesday volume was back down to about 1.6. Thursday about the same, a little less. But then Friday only about 1.4. So a big drop off on Friday's volume. Again, the volume is on the sell side. Every time we pick up volume, it seems to be negative right now. So keep that in mind as the bigger players trying to get out of the market in waves. I'm going to see continuing drifting up when there's no volume in the market. And then as they start to come back and do their business, we sell off. So be aware of that as we proceed here over the next couple of weeks. Let's take a look at what we've got economic data-wise coming out this week, and then I'll tell you what we're going to really focus on, which are two things not on this list. Monday, there's no data at all. Tuesday, retail sales, Empire Manufacturing Index, and import-export prices. That's all an hour before the bell. 30 minutes in is business inventories. Wednesday, we've got the MBA Mortgage Index, PPI, net long-term tick flows, industrial production and capacity utilization. We've got the NAHB Housing Market Index. We've got crude oil inventories. We have the Fed Beige Book. Thursday, we've got initial and continuing jobless claims. That's the weekly data. We've got housing starts and building permits. That's all before the bell. Philly Fed 30 minutes in. That can move the market. Natty gas after that. Friday, the first look at Michigan sentiment for the month of July, and then leading indicators a couple minutes later. So there's a lot of data coming out this week, and stuff like retail sales is important. The PPI can be important. Industrial production, capacity utilization. I don't get all excited about the weekly jobless data, but Philly Fed is important, and Michigan sentiment a little bit important. Leading indicators important. Wouldn't put any of them on the top level, but I have a lot of them that are secondary numbers out of a couple different levels of numbers. So that's important. But the other thing to remember here is this week we have two big things going on. Number one, Friday is options expiration for July. It is a single expiration, not triple expiration. It's just options, not futures and commodities. But it does mean that if we're going to have an options unraveling move, as we look for during options expiration week, it will likely come on Wednesday. It could come on Thursday if it doesn't come Wednesday, but we start looking for it after the first hour's play on Wednesday. And we'll be focused on that. And then on Friday, because of expiration, probably not much going on at all. It's also a summer Friday. We just saw what those look like. Those will continue until about the middle of August. So we've got 4 or 5 true summer Fridays left. People take off early, go hang out with their families, go on trips and whatnot. The other thing this week, Tuesday is the start after the bell. Intel releases earnings. That is the beginning of the core 8 days of earnings for the quarter to look back at the second quarter earnings. So we're going to have to be aware of that. That becomes a different type of trading environment. We teach this all the time in our courses and in our lab. You got to approach the market slightly different because there's a lot of movement that's based on earnings, rumors, and reports. You get gaps. Even if your stock doesn't release earnings, you get gaps based on other stocks in the sector that release earnings. So we got to be aware of all that while we're trading for the next 8 days starting Tuesday. So it's Tuesday, Wednesday, Thursday especially. Still a little bit on Friday, still a little bit the following Monday, and then Tuesday, Wednesday, Thursday of the next week. Those are the 8 core days of earnings. The 3 days in the middle of next week, Tuesday, Wednesday, Thursday, those are the real big days for earnings releases, ending with Microsoft at the back end of that, but a lot of other stuff between here and there. And because of that, there's just a lot of jumpiness. But be aware that if the institutions are starting to sell this market, if they feel like there's some bad news coming in terms of the projections, they're going to start to get out ahead of that. They may have already done it this week. If they start to hear bad things out of those reports, the selling will accelerate. So we'll be looking at that volume and the price action that goes with it to get us going in the markets all week. We'll be in the lab to help you out. Charts as usual brought to you by eSignal. And if this video is useful to you, please like it on YouTube. It does help us out. Have a great weekend. Have a great trading week. We'll be here to help you. Please stop by.